What is going on, everybody? Hope you're having a great day as always. Welcome back to the channel. It's your boy D, and this is D's Daily DD. Want to welcome you back for another freaking episode. And also, remember, I'm not a financial advisor. This is not financial advice, right? So don't take it as that. Take it for educational and entertainment purposes only. And as I've said before, it is always my intent and my purpose. My intent is to bring you the most honest opinion, the most genuine opinion that I can give you. Based on data, based on information that's out there, based on research and things of that nature. Okay. So today I'm going to break down, a couple things that I've been paying attention to with AMC and the vote and APE and what is going on with the community, right? What I am seeing that I do not like is there is a lot of division right now. And to me, it seems like they're trying to divide and conquer us, right? When you are in war, right? How all these people have been saying this is a war between the short sellers and us, the retail investors, the apes. There's different strategies, right? And usually one of the strategies that is involved with going to war and fighting and all that is how do you win? You divide and you conquer. Okay, so I just want to put that out there if you haven't noticed, because with this proposal of AMC doing a a vote on if we want to combine the shares, if we want a reverse stock split, and all that, I've had a lot of trouble dealing with this and thinking about this and seeing both sides of it. And as of right now, I'm gonna, show you where I stand in this video, and I'm going to explain why, right? Because I have always been a data-driven and a numbers person, and a researcher. So that's where I'm at. I'm gonna explain to you where I'm at as of today. Now, of course, it's just a proposal right now. There's no hard date on the vote, but I'm gonna point out what I found, and that's that's what this video is going to be about, right? Things could change, my mind could change, but as of right now, I'm at where I'm at, and I'm going to give you today's decision. If the vote were to happen today, how I would vote. Okay, now I'm not here to give you, to tell you how to vote. You got to make your own decision. You have to do your own research, and you have to decide what is best for you and your investment, right? I've always told you I'm not a financial advisor. I'm just a guy on YouTube who likes to, give you thoughts and opinions. And I have been a part of the AMC community for a long time. Okay. So, that's all I really got to say for the intro right now. So let's jump into it and let's get started. As always, I hope you had a great holiday, right? I got to spend a lot of time with family and friends, and I really enjoyed it. I was traveling and whatnot. So now I'm back, and, I've been paying attention to YouTubers. I've been watching a lot of opinions, right? A lot of different YouTubers. I've been on Twitter and seeing what the thought process is. And because this is such a complicated transaction, I think that's why our brains are just everywhere right now. But let's jump into this first, right? Let's start off, from this side, and then we'll move over to this side. So as of right now, my vote for combining APE and AMC, I am yes. I am a yes vote, right? And there's just a couple reasons for that. I think it could cause a share recall on the APE side or both. If it's true that all the shorts have to close, their APE side position before it would merge, then I think that's a good, risk to take, right? So we can combine APE and AMC. And my assumption is that we would combine the prices, because when they removed APE, they took the dollar amount, right? It was like a 18 something, maybe 16, if I recall right. And they moved the dollar amount over, and that's how you got the value when it opened at like $6 or $7, okay? And you had the remaining 12 or 10, right, on the AMC side. And then you started to see AMC come down to after that, right? So it would eliminate another reason I would vote yes is because it would eliminate the arbitrage that happens between both pricing right now. And an arbitrage, right, is when they use, because APE has been way cheaper than AMC. That's arbitrage, right? Like you can buy APE for cheaper, even though they're basically the same thing, how Adam Aaron has said. Now, they can issue more shares down the road. I understand that some people are saying that, well, I'll get into that with the reverse stock split, but they can have the option to issue more shares down the road, right? I would vote yes for that too, right? So they have the tools and what they need. So now, just some stuff I've been noticing. I'm I'm going to try to break this down right as simple as I can, but you have a certain amount of shares that are short on both sides right now. So there's 108 million shares, which is around 21% of the float on paper. And I'm just talking about real shares right now, not the synthetics, not the IOUs, not all that. Just on paper, what is showing up in the data. Ape has around 34 million shares short, which would be 6.74% of the float. And if you combine those theoretically, right, you would have around 27% of the float short combining this. But then, okay, so you're adding those two, you're going to have around 142 million shares that are short. And then you would divide it by the new float, right? If they were to combine them, I think there's around 700 million shares of Ape now and around 516 million of the AMC. So you have to combine those. So the new float would be around 1.2 to 1.4 billion. And the new short interest would drop way down. Okay, so that's my first point, right? That's the part that I'm really struggling with, right? Because you're reducing the chance for a squeeze, because the higher the short interest, the higher chance you have of getting a squeeze, right? The lower, the less chance. So now we're talking about the reverse stock split. Right now, as I stand right now, I'm not for it. And these are some of the reasons, because I know a lot of people saying, oh, well, we're going to lose a lot of shares. We're going to lose a lot of shares. Yeah, you are. We are, right? If this goes through, you're a shareholder, they're being reduced 90%, right? Should already know that. The QSIB number. So everyone keeps saying, oh, well, that's what would cause the squeeze, that the QSIB number, if they change the QSIB number. But are we willing to take the risk to lose 90% of our shares to see if this causes a run? I'm not really for that. If the reverse stock split goes through, the floor is raised from 500 or 1,000 per share, right, to 5,000 or 10,000 a share. I'm really not, on board with that, because you see so many halts already happen with AMC when it moves a few bucks, right? When it moves $4, $5, $10, they halt it, right? So how are we gonna get past these numbers, 500, 1,000, and hit those crazy numbers, which, right, in my opinion, some of my brackets, the highest that I would even think that this thing could go to would be between 5,000 and 10,000, right? That's just my opinion. I don't think it could go to 100K, like we've seen in the past, people have said. So also, why now? We can say no now, right? If we vote no, if people vote no, the shareholders, and we can have AMC come back with a new proposal in a few months, right? So if AMC has all this money and they're good, with the debt until, at least from what I know, 2025, 2026, then why do we have to do this right now? Okay, it's just a proposal, but why now? Why can't we just wait and see what's going on with the movies, with the business, right? If Adam Aaron keeps saying that there's going to be more movies and there should be more people flowing in the movies in 2023, why do we need to say that we need to pay off the debt, like right now, right? So the next thing is, are they deleting the mess that was created? And this is the part that I'm most struggling with, because the IOUs and the placeholders with the 10-1, I understand. That's what I'm trying to explain to you. Like, right now there's about 142 million shares. If you reduce those, the shares that the shorts owe, they go down, right? But it's more value is what is said, right? But don't we need those synthetics, those fake shares? Don't we want them to cover all of those synthetics, all those fake shares that were created? Isn't that what would cause, like, them buying those, right? The short sellers to cover in order to get the price to go to these insane prices that we're seeing, right? That's my thought process on this right now. Don't we need those synthetics to get the MOAS? So how is it that we want to, get rid of 90% of the shares right now? It's just, I'm really trying to process this. And there's just been a lot of opinions too, right? That kind of like changes your mind here and there, or like, wait, let me think about this. Right. But as of right now, this is what I'm looking at. Again, before the reverse stock split on the AMC side, you have around 108 million shares right now in Fintel, which would go down to, around 10 million, 10.8 million shares after, which to me would mean a smaller MOAS and a smaller chance of profits for us, the shareholders. Okay, so I'm trying to look at this from the shareholder side, that I just don't see the value, because what can happen, right, if this all goes through, it's a yes across the board, and you do the reverse stock split, you now have less ownership, right? Because if they bring the price down, you already lost 90% of your shares, right? And you're at $50. And the price starts to come down, they keep shorting it and finding shares, right, to short with. They bring it down. Now you're also losing the value of what it got transferred to, right? So now you have less shares and your value is going down too. Okay, so that's where I'm at right now. Okay, 140 million shares after the reverse stock split, 14.2 million shares short, which the short interest would be around 10 or 11 or 12%, assuming that the shorts just transfer everything, right? Just transfer their short positions, because from what I read, is that they don't necessarily have to close out. They can pay a fee to transfer. And I'll read that to you right here. Watch. That's why I took these screenshots. So you can, this is from True Demon. All right. So if you guys remember, you guys know who True Demon is. He's pretty well known, but here's my question, right? What happens to short positions in either of these scenarios? Are shorts required to cover and return shares to the lenders, or do the short positions get transferred to new stock and they assume a new position marked in the new stock according to current market value? Question mark. I imagine that the outcome might be different in reverse mergers versus acquisitions. So could you please answer both scenarios separately? Thank you. And I called Fidelity and I got the answer straight from the horse's mouth. The result is that the short position is marked at the notional value. There is a small fee paid to the brokerage to cover the cost of the transfer, and the position is moved to a new QSIP as pointed out by this user, right? Essentially, the net result shorts stay right where they are, minus a tiny one-time fee that barely is worth mentioning. Okay, trying to explain this to y'all. Nothing really noteworthy happens. Documenting this here so that we can serve as a source. As mentioned, however, naked shorts are different. The short seller and the broker who never located borrowed shares who issued the naked short is on the hook for whoever bought the share that was borrowed. In this case, it is unclear if the broker or the short seller is responsible for delivering the share, but I would suspect that if it was the broker who accepted the borrow fees, that doesn't mean that the broker couldn't simply force a recall from the short seller to cover their position. The rules get extremely murky here. Failures to deliver is what comes due at the time of the merger, and so must be settled by a merger date. That's what stuck out to me, right? If you're merging APE and AMC together, then the FTDs, remember the 43 million FTDs on APE on day one. Remember all that. The next part here's where, True Demon talks. And let's zoom in a little bit. Oop. Oh, man. All right. Short shares do not need to be covered before a merger or reverse merger. Mergers are generally mandatory events, meaning the company and its board members have decided to move forward with the merging, and the company's shareholders will receive new shares of the remaining company or receive cash for the shares held prior to the mandatory event. Fidelity's organization team, along with the transfer agent, will transition shares of the old company stock held short to the new company stock, and position will remain short within your account. So see, that's what I'm saying. Like, it's not true. It's not necessarily true that they are forced to cover everything. But the FTDs, that's what popped out to me. Okay. The current holder of the borrowed shares will see the results of the corporate action on their end and receives new shares of the merged or reverse merged company. Keep in mind, there may be a commission or other costs associated with the reorganization of the short position. You also have the ability to buy to close the position on your own up until the corporate action's expiration date. They have the option to close out, right? The shorts. Doesn't mean that they will. Visit the communication center for more details, blah, blah, blah. Okay, that part is not so much, but just wanted to point that out, right? That just because they changed the QSIP, like, is that really worth the risk of risking 90% of your shares to reduce it? Let's just go over some things here. Another reason I think we haven't gotten the short squeeze is because 2022 is the worst year ever for stocks and bonds since 1871. So you can see here, 22 is way down here in the negative, right? So if you just got into the stock market the past 2 years or so, you have to understand that this is one of the worst years, ever in history. Compared to other years, most years land right around the 6 to 7% a year, right? Or return rate. So that's what is also, in my opinion, why the short squeeze hasn't happened, because we don't have the momentum of bull market right now, right? We've had a lot of downward momentum in the overall market. Um, you know, what I'm looking at too, which is interesting, is why would we do any moves right now when the cost of borrow is literally exploding? This website doesn't even want to show you the red line. See the red line here? It should technically be all the way up here around 100 and it hit like 128% this morning. Went down a little bit, but not much. But see, they haven't even updated the little line here, the red line that goes to show you where the cost to borrow fee is. And the last update was 1,000 shares available at 116%. You can go here. They're actually moving the shares because that was 0 not too long ago. It's at 39 shares right now, with 115.9%. And historically, when this has happened before, the cost of borrow fee goes up. As soon as they start covering, right, it'll come down, and you get the reaction of the stock price going up. And I'm gonna show that to you visually right now. As far as the stock price, it's been a while since I made a video, so I was targeting this area, and we made it up there, and we got rejected, and are back down to the lows right now. Okay. Yeah, I already showed you all that. This is the last part I want to kind of wrap this up with. Is this is the cost of borrow fee, right? These bars right here. You have the line price down, and look at the reactions again. This is why I'm anticipating a big move soon. Anyways, it's because you see the price here going with the cost of borrow, right? As soon as the cost of borrow drops, because they cover some, or some shorts cover, this is when you get to see the price move up. So right now with this extreme, right, they're going separate ways, the price and the cost to borrow. But eventually, once they reverse, the price should come up and the cost to borrow should come down, right? And then we're gonna zoom out to go back to here. So this was around May 27, 21, when we had the big run up, and we come down here. And someone on Twitter pointed this out, that, well, how were they able to bring down, from the 30s, 40s? Well, it's because these big block of shares showed up. You had millions of shares that hit the market, and how he said too is he thinks they came from the insiders, right? When Adam Aaron sold, when all the insiders sold around 30, $40, well, they put all these shares into the market, and it dropped the price. So just want you to see that, with the whole cost of borrow fee for the longest time, right, it was in the low 1, 2, 3, 4, 5% area. And ever since around May 26th of this year of 22, you started to see this actually fluctuate and move. And now we are at like all-time highs right now, again, with the cost of borrow fee, right, at 118%. And the rebate is over 112, is at 112%, which means that's what when the broker can't find shares, that's what they're willing to pay. That's what they're offering, the percentage, if they can find the customer or a shareholder that wants to lend the shares out for a profit. Another thing with the proposal, I know this video's going, but I feel like there's a lot of information that I need to talk to you guys about. And I don't think people have even mentioned this either, right? That the sale of APE units to Antara will be split into 2 tranches. So I think the first one, remember when APE went from 60 cents to $1.20 or whatever, around that range? That was the first tranche that involved the immediate purchase of 60 million APE units, right? And then the second tranche for the purchase of approximately 106 million APE units, as well as the 100 million debt exchange, are subject to the completion of the waiting period under this HSR Act, or law. So there's a waiting period, but I think it's 30 days from what I found in this part. I think it's 30 days before they can complete the whole offering. So theoretically, right, if you see 106 million ape that are going to be purchased here soon, the second part of this transaction, then ape should rise to around $3 or $4, right? Theoretically, just by going maybe $5, right? That kind of buying pressure, because if the 60 million took it from 60 cents to about $1.20, $1.30, then I would just say, right, well, based on 106 million, that could also cause a good run up, to get to the 5 or 6 range, potentially, right? Not guaranteed, not financial advice, just telling you what I'm seeing here based on this information. So yeah, here's what I was talking about, the 34 million shares sold short on APE, and the 108 million shares sold short on AMC. And that's all I have, to tell you guys. Just want to make sure. So yeah, this is the same 39 shares to borrow. 4 minutes ago was the last update. So that's it, guys. That's a wrap. Thank you very much for stopping by. Hopefully this video, gave you some good information, some valuable information. And I hope to catch you guys in the next one. I probably won't see you till 2023. So Happy New Year, guys. Be safe, be smart out there if you plan to go out. But just always be safe, guys. There's a lot going on in the world right now. So hope to see you in the next video. Catch you later.